Hi everyone, I hope this message finds you doing well. I wanted to send a quick message out to all of our clients, prospective clients, or anybody else that has questions or potentially concerns about what's going on in the recent days and weeks with the stock market. We are officially in correction with the markets, and if you're not familiar with the academic definition of a correction, it is when markets drop by 10% or greater. The major indices that most of us see on the ticker, the NASDAQ, the S&P 500, the Dow, are all down somewhere 10% or greater. And the last few days, we've just seen absolutely wild swings in the market. On Monday, the market was down 2.5% and then finished basically flat in the last hour of trading. Today, as I'm filming this, which is Wednesday, the 26th or 27th, I forget which day it is off the top of my head, but we've seen markets up all day, and then the last hour of trading today, we've just seen the markets actually turn negative. So this is causing a lot of concerns for some people. What's really going on, though, and I think this is really what I want to get across to people so that they have an understanding. Right now, the market or investors are concerned about what is going to happen with interest rates specifically. The Fed has announced that they are tapering their bond purchases down to zero by March, essentially, which means that one of the actions that they took during COVID was to buy mortgage-backed securities and treasuries to artificially drive down interest rates to spur economic growth during the pandemic. They have basically, because of inflation being at an all-time high over the last 30 years, have said we're done with our bond purchasing, and in addition to that, we're likely going to have somewhere between 3 to 5 rate increases on the Fed funds rate this year. So for high growth and high tech stocks in particular, those have gotten hit pretty hard because with low interest rates, those stocks tend to trade at higher multiples, okay? And so while the Fed hasn't actually taken action, the market is anticipating what's going on there. And we always share this with clients that the market never looks through the rearview mirror. It always looks out on of the windshield. And so it really doesn't care what's happened or where we've been at. It's really where the market anticipates the future being and how prices react to that. So while this is short-term volatility and has certainly caused to raise some eyebrows and catch our attention, the economic data is really the things that we are more concerned with. And when it comes to investments, we always take a long-term approach to these, and we don't want to let volatility spook us or cause us to make rash decisions in our portfolio. While certainly every one of our clients has a different risk profile and a comfort level depending on where they're at in their personal financial lives and their journey, most portfolios have been down year to date. And we always like to remind clients that we don't make investment decisions over a 3-week period. We certainly don't like to make them even for a 3-year period. We like making investment decisions over the long haul. There's a graphic that I'm going to post next to this video for reference where it talks about the max drawdown to the market over a year, where the max drawdown was and where we finished. And what you'll notice in this infographic is that oftentimes where we finish in a calendar year versus the deepest point that the market dips to, they're often quite different. In fact, there's very few points where the market finishes the year at its low point. So keep in mind that when we zoom out and we look at things, it gives us better perspective. Certainly, if any of you have questions around this, you want to have a deeper conversation, hop on our website, instrumentalwealth.com, schedule time with one of your advisors. We'd love to have a deeper conversation with you around this, and certainly more to come over the next few days around this topic. Thanks, everybody, and have a great day.